Yo, yo, yo. All right, I'm about to start. Give me like a couple of seconds up here. Y'all can hear me? Oh, shit, trippy. Yo, is it telling me echo? It sounds bad? No. All right, so we're clean. All right, for sure. All right, so let me get it popping then. Let me bounce this. This becomes irrelevant. All right, so you can see my charts. Everybody can see my charts. If you can see my charts, type yes. All right, for sure. Yeah, I'm not really used to using GoToMeeting. I mean, not GoToMeeting, Google Hangout for this, but I usually use GoToMeeting so I could easily interact with my customers or whatever, clients, students. Blurry. If it's is it if it's blurry for you, I don't know what to say. Other people say it's clean. So this is what I'm gonna do. You can see my charts. We're Gucci. All right, so basically, you can see my mouse. Everybody can see my mouse. We're all good. Type 1. Type 1 if you can see my screen clean in the mouse, because I had to put on this highlighter. Clean, clean, clean. All right, for sure, for sure, for sure. All right, so check me out. Basically, to start marketing my charts, pretty much how I see the market, what I look for, how do I see it, give you a little taste of firm and profit, pretty much. I'm not gonna go in full details, but what I am gonna do is I'm gonna teach you how to basically, mark up your charts with the right quality versus the false aspects of looking at your charts. The main thing when you want to look at your charts, the first thing you're gonna want to do is put on your period separators. A lot of people don't use the period separators. I don't know why. Period separators honestly is everything. It tells you the period of what time frame you are trading on. I don't trade the M1. I don't trade the M5. I don't trade the M15. I don't really look at the M30 too much, but I look at higher time frames. Write this down. The higher the time frame, the stronger the trend. Okay, the higher the time frame, the stronger the trend. And I say that simply because it is a fact. The higher the time frame is stronger because it takes more data from the smaller time frames and basically builds a stronger structure. Okay, when I look at the market and I say structure, I am referring to how the market is basically making higher highs, lower lows, lower highs or higher lows, and specifically what is the trend bias. You always want to trade in the trend. You never want to trade against the trend, and you never really want to go high value against the trend and the trend goes against you. Okay, I'm gonna go over some good qualities, but the first and foremost thing before I even go into market my charts, I want you to see how the market really moves by understanding yourself. Okay, trading is 90% mental, 10% skill set. A lot of people when they trade, they don't understand that. They feel that it's so much about skill set that they forget the mindset. And at my current situation in trading, I don't really care about skill set. I'm already at a good skill set level. The only thing I need to focus on for myself is mindset. Okay, I look at the market legit 90% mental, 10% skill set. Can't stress that enough. You're not supposed to trade when you're angry, mad, sad, depressed, frustrated, revengeful, greedy, desperate, anxious. No negative vibes when you're trading. You want to trade in a positive environment, clean slate of mind. When we trade, we also understand that the market gives us a lot of money. It can also take away a lot of money. Since we're not used to seeing money in such a fast pace, we are also able to lose it at a fast pace. Okay, so that will instantly enter up inside of your emotions, and when we start trading, we're going to instantly start getting impact towards fear, greed, anxiety, lack of confidence, or just over too confident. I'm gonna give you some examples of that. If I was to enter a trade, okay? We already know that I'm gonna start off negative because we're buying into the spread. Everybody starts off negative. When I enter a trade, it could be off of two things. I'm patient enough and disciplined and I got it on time, or I was too afraid to miss out on the move, so I got in too early. Too early means a bad move. Too early entering a trade, that equals anxiety, okay? You're gonna start feeling like you are desperate to get in, which creates a bad entry, which opens up fear of loss, fear of missing out, which gives you lack of confidence, lack of discipline, lack of patience. So when you trade go against you, you start blaming everything else about why you lost in that market, that decision, that trade setup. Is everybody following me so far? Push one. Because psychology is the biggest thing. It's not even about marking up your charts. I can mark on my charts in literally 30 seconds. But if you can't follow my mindset, you're never going to get on my level. To be honest with you, on top of everything else, when we are trading, I want you to also analyze the market in a fashion of zooming out of your charts. What I personally do is I zoom in all the way and I zoom out 3 clicks. 1, 2, 3. 3 clicks out for one reason. Whatever I see on the left side of the screen, I need to mark it up to get the future side of the market. If I'm on an H1 time frame, I can't see the future of the market looking at the left side. It is blank. So what I'm gonna have to do is go to the H4 to see if I have any data. If I have no data here, I need to go to the daily to find my data on the left, okay? Understanding this concept, if we were trying to trade and you only focus on buying and selling off of just looking at the market here, you're already failing. That goes with the mindset. Once again, the mindset, okay? When we are looking at, what the hell just happened? All right, so we understand that it's mindset. When we're looking at the mindset of the market, we're only supposed to trade in a positive, live mindset being. There shouldn't be no ego. There shouldn't be too much being overconfident. There shouldn't be no lack of second guessing somebody else's opinions of what is going on in the market. You are your best self-independent trader. Nobody else should tell you what to do in the market but your own decisions. If their analysis matches up with your analysis, it just gives you more confirmation on your analysis. So what I'm gonna do real quick, I want you to understand when we are trading in the market, we are basically looking at how to buy low and sell high, okay? I do this all the time for everybody that comes to me personally that asks me, yo, Ryan, how do we basically get in the market on entries? How can we look for a better entry? How can we find a better exit? We look for buy low and sell high stages in the market. Anything that has to do with horizontals, okay? We are basically looking for that for ultimately buying low and selling high. Basic supply and demand, basic economics. What do we do? Buy low, sell high. The bottom of support, we call it a demand zone, which is a shaded box, which I'm gonna get to in a bit. And the top of the line here, we call it resistance, which is also a supply zone where we would actually sell in the market, okay? So a trend line, just want to go over this real quick. It doesn't really count as a true form of buying low or selling high because it's called a trend line. It basically just complements price moving into a trend. A trend line can be broken with consolidation in the market. Consolidation meaning moving sideways. If the market is moving sideways, the trend line could get broken. If a trend line could get broken, that is not a form of buying low or selling high if it's going through consolidation. What covers consolidation and ultimate buy low and sell high stages is the horizontal lines. So I'm about to get into this topic right here. Give me 30 seconds. Clear this up. When I am looking at the left side of the market, I simply want to find buy low, sell high stages. What I'm gonna do is I'm gonna drop horizontal lines and a couple of inches of each candle. Basically, I'm looking for tips and bodies and wicks. Write this down. When I'm marking my charts, I look for tips and bodies and wicks. Tips and bodies and wicks are very important because if you did not know this before, I'm gonna tell you now. Price closes at the body, price extends and fails with the wicks. A wick on a high time frame, on a smaller time frame is candlesticks. Meaning this wick that you see here, once upon a time, was a candle on this time frame. On the smaller time frame, those are actually printed candles, meaning this is actually where price went to. This is the low, not the tip and body, but this is actually the data of a low. Okay, so I've solely focused on tips and bodies and wicks so much because it gives me the real area of where the market is truly trying to go to. Now, you also got to question it. If you understand support and resistance, there's ways of looking at it. And one of the biggest ways of understanding support and resistance is to understand what is the nature of it. Is the market moves in a very physical line of things. It's psychological and mainly physical. It's based upon human emotions. So I'm gonna basically do this little analogy. If we were to stand up on the floor and we were basically standing on it, we are in demand, we are supporting ourselves. We all could agree on that. Okay, that is called support. If I was to go to the ceiling and I was to go hit the ceiling, that is called resistance. I can't get through the ceiling, but we all could agree I will come back down. Simple, right? The way how support and resistance works, it gets broken with a big candlestick. So now let me go back to the analogy. If I was to break through this floor, I will need like a sledgehammer, something very, very strong, something very, very aggressive and a force to break through the floor. Okay? And the same thing for the ceiling. I would need something very aggressive to break through